Is it a good or bad idea to work in a family-owned business? Let's pick this scenario apart. Employment at a family business is not a decision to be entered into lightly. There are a few scenarios that come to mind. You and a group of your family members decide to financially invest in a company, appointing each other to different C-level management positions. Some companies are owned by a parent, and all the children work as lower-level employees. Spouses often work together, starting and building profitable businesses many times from nothing. But is it a good idea to work at a company owned or controlled by family members? I found a ton of information both for and against. Let's talk about the pros. You can't be caught off guard because of an unknown character flaw. You know what personality and behavioral type you're getting with each family member. Family members are more likely to make great sacrifices for the success of the company, like ensuring deadlines are met by working late for weeks at a time, taking temporary pay cuts, etc. Maximum support is given to the company since the company is how the family financially survives. Strong bonds equate to sticking together during hard times. If your underage children work for your company, there are tax advantages. Talk to your tax advisor for more information. The work environment could be more relaxed as long as there are no family conflicts. You don't have to take time to meet and greet other people and figure out what their likes and dislikes are. And here are the cons. The work-life scenario can become too comfortable. Some family members may perform marginally since they know it's a good chance they won't be terminated. Conflicts at work or at home may carry over. Some families break up because of these conflicts that can play themselves out in court, permanently damaging relationships. Then you have the rule breakers. Family members may break employment policies and think it's okay. Whether they understand they are breaking the rules or not, they may consider themselves special with special privileges. Fresh ideas may be harder to come by if family members hold decision-making positions. In addition, resistance to change can impede creativity. Family-owned businesses are less likely to innovate unless outside help is brought in. Talented job seekers may avoid family-owned businesses knowing that any promotions will go to a member of the family. Too many bosses, too many opinions, too many people in charge doesn't leave any employees to actually perform the work. What if two different managers gave two different, incredibly opposite instructions to a non-family member? It would be a tough conversation for one family member to make a decision that negatively impacts another family member, especially if a termination is warranted. It's hard to separate work from home, especially if spouses work together. If there is a serious family conflict, a court could possibly break up the business. Disagreements are rampant, even among experts, on whether it's wise for family members to start and operate a business together. One expert cited a number of studies that show family-controlled companies create more wealth and outperform public corporations on many metrics, including total returns and cash flow. Another expert says that family-controlled corporations seriously lack meritocracy, since the choice of C-level managers and key positions are limited to family members, and because of this, many of these family-controlled companies trend downward over time in terms of growth and innovation. Nike, Foxconn, Volkswagen, Samsung, Ford, Mars, and Walmart are all family-owned businesses. With that being said, 70% of family-owned businesses fail or get acquired before the second generation takes over. In addition, fewer than 10% survive to the third generation, and less than 10% of owners are financially independent from their companies when they retire. Family-owned and managed companies are a delicate balance between risks and rewards. An employee walks into your office and tells you his or her financial problems. Then they ask you for a loan. What do? Do you make the loan or do you turn them down? I want to start out by saying that this video is meant to only highlight information on this topic. I've researched the pros and cons about loaning money to employees. It sounds okay in theory. The employee pulls you aside, states their problem, and asks for a loan. Further, they suggest that you, the business owner, can deduct the amount owed from the next paycheck. Sounds easy enough, right? Making a loan to one employee may lead to requests from other employees requesting loans. This can put your company in an awkward situation, saying yes to some and no to others. What if the employee doesn't pay on time? What if they request to negotiate payment terms? Or what if they need more money? What happens when the employee quits? I want to start out by saying that this video is meant to only highlight information on this topic. I've researched the pros and cons about loaning money to employees. It sounds okay in theory. The employee pulls you aside, states their problem, and asks for a loan. Further, they suggest that you, the business owner, can deduct the amount owed from the next paycheck. Sounds easy enough, right? Making a loan to one employee may lead to requests from other employees requesting loans. This can put your company in an awkward situation, saying yes to some and no to others. What if the employee doesn't pay on time? What if they request to negotiate payment terms? Or what if they need more money? What happens when the employee quits? If you don't want to loan an employee money for any reason at any time, I highly recommend adding this policy to your employee handbook. Should an employee ask you to loan him or her money, I would recite the company policy. The problem starts when you say yes to one employee while saying no to the other employee. This may lead to uncomfortable situations at work and possible litigation issues, as in a discrimination lawsuit, and other scenarios that may create a stressful working environment at your company. Different states have different laws related to this subject. Since I am based in Texas, I will focus on the laws here. Should you decide to loan an employee money, I recommend educating yourself on subject matters related to loaning money to employees. Some of those topics involve the Texas Payday Law, or similar laws where you reside, the FSLA, or the Fair Labor Standards Act, primary federal and wage hour laws, wage deduction guidelines within the Texas Workforce Commission, or whatever government entity monitors employment laws where you reside, and possible tax implications. In Texas, no matter what the employee owes your company, a deduction for a loan payment cannot take the employee's salary below the minimum wage for your area. Not only that, If the employee works overtime, you, the employer, cannot deduct the loan repayment using any of the overtime money earned. I advise any business owner who is considering loaning money to employees to review the rules and guidelines established by these two federal entities. Without getting away from the topic of this video, the Texas Payday Law, TPL, deals with, among other issues, how to avoid illegal deductions from employee wages. A deduction from an employee's paycheck to repay a loan must be authorized in writing by the employee in order to be valid under the TPL. It is up to the employer to document the loan in writing. There are a couple of documents recognized by the TPL that the employee would sign to validate this type of wage deduction. In addition, the reason for the loan must be lawful. An example of an unlawful payroll deduction is for a gambling debt. If gambling is illegal in your state and you bet an employee $100 for whatever, and you win, you cannot deduct the $100 from the employee's paycheck, even with all the documents signed for something which violates state and federal law. To charge interest or not to charge interest, that's something else to consider when loaning employees money. Interest charged to an employee's loan may be considered phantom income earned by your company. The FSLA and the Department of Labor, the DOL, are silent when it comes to deducting for these types of fees, and they might consider these fees as normal cost of doing business. I highly recommend consulting with your professional tax advisor for more information. When someone tells you to keep a secret, as sure as the day you were born, they are going to tell someone, and then here comes the snowball effect of everyone now knowing that your company is open for business with regard to loaning money. Guidelines may include maximum amounts, payment terms, interest rate charges, and types of loans. Loaning money in general is a touchy situation. If you choose to loan money to an employee, I strongly recommend that your company outlines formal rules and expectations surrounding that loan. Employers should never loan money or advance wages to an employee without treating the occasion like a bank would. That means securing the employee's written agreement on a separate loan or wage advance document listing all the particulars of the transaction, such as amount loaned or advanced, date of transaction, full name and social security number of the employee, the amount and frequency of repayment installment, and what happens to an unpaid balance remaining when the employee leaves the company. Some deductions are clear and straightforward, while others are complex and restricted. Find out what legal formalities are necessary in Texas or your state to make a valid promissory note, and include such language in the loan or wage advance agreement so that if the employee fails to satisfy the repayment obligations, the company will have the option of taking the ex-employee to civil court. Again, I highly recommend consulting with an employment law attorney who is familiar with both federal laws and the laws where you reside. Finally, consider this story from an actual Texas payday law wage claim that was filed in late 2006. The employer had allowed an employee paid time off for his wife's maternity medical leave and for her appointments, and in addition for spending time with their baby. The employer verbally agreed with the employee that the paid days off would be repaid one day at a time from future paychecks. But when the employee walked off the job soon after the child's birth, the employer deducted the full amount all at once from the final paycheck. Since the deduction agreement was not in writing, the employer lost the Texas payday law wage claim that the claimant filed. The claimant sent the following email to the employer. I know we agreed to you taking the 5 days you paid me for that I didn't work, one paycheck at a time, but I quit before you could take your money back. You are a dumb SH blank blank. The Texas Commission says without my signature, you can say we agreed to this verbally, but you lose since I didn't sign anything. I intentionally left your store open when I quit. Hope someone came in and stole everything in the store. Answer my call so I can tell you what a dumb SH blank blank you are. I now have a new trick with my next job. Take days off, promise to do makeup work, get paid, and then quit. Very sad. Can a manager or business owner be friends with a subordinate employee? Is this a good or bad idea? For the purposes of this video, my friendship scenario deals with platonic friendships only. Bosses, managers, and employees have one thing in common. We are all human beings. Because you have a title of vice president, business operations consultant, or business owner doesn't mean that you are any different than, let's say, a janitor, a receptionist, or a fry cook. People in general can be frustrating. Employment situations can be aggravating. Having someone at work with you to discuss issues or vent frustrations can help relieve stress and pressure at work. Over time, these shared experiences can develop into an organically created friendship that can grow over time. There is a context basis to friendships in general. Friends are made with people in your immediate context, such as work, volunteering, etc. It's tough not to think of some employees as friends, since it's possible to spend more time with employees than with your spouse or your family. With that being said, is it a good idea for a boss and an employee to be drinking buddies or to take family vacations together? Let's pick this scenario apart. Work can be more fun and enjoyable for both boss and employee because of the ability to be yourself with this person. Having an employee as a friend may let you in on company gossip that you may not have access to because of your position. Having a friend at work can not only make work more enjoyable, it can enhance creativity and productivity. With the friendship comes a commitment to support each other because of mutual respect and understanding. You each see the personal side of one another. Both boss and subordinate will have more of an understanding of what the other needs to have a great day or to be more productive at work. It's great to share experience together, like work parties, meetings, corporate changes, or company projects. This sharing of experiences allows each person to have someone to talk or vent to that has firsthand knowledge of the situation. This sharing of experiences, validation, and connection is what bonds the relationship. There are a lot more cons than pros to this scenario. With that being said, I will only touch on a few. Should the friendship sour, it's possible the subordinate employee may know information about the company or personally about the boss that was not supposed to be known beyond management. If the subordinate employee and the boss worked together and the friendship dissolved on a bad note, it could be difficult for both people to work together, especially if there were a serious conflict or feelings that were hurt. This can directly affect productivity and personal morale. If the employee divulges too much information about themselves, this could work against them. Finally, disciplining the employee post-friendship could be looked upon as a form of retaliation. Is the friendship breaking company policy? Is the boss the one that's supposed to enforce the company policy? Some companies have employment policies on limiting fraternization at the office due to the possibility of creating an unprofessional environment, lost productivity, disagreements on promotions, and to reduce the chance of sexual harassment litigation. The subordinate employee's relationship with other coworkers can become strained, especially if a promotion or a raise is given. There could be whispers of favoritism as the reason why the promotion or raise was given, which can eventually lead to the subordinate being alienated from colleagues, especially if everyone believes you are getting preferential treatment. In some worst-case scenarios, the subordinate's colleagues could actively work against the employee. Socializing outside of work, meeting your boss's family and vice versa, sharing intimate details about your life, etc., is very tricky. Friendships with your boss involves strong boundaries, so the friendship doesn't affect how you both perform your job as well as how you both relate as professionals in situations where the power is not equal. Is it a good idea for a boss and an employee to be friends? Personal friendships between a boss and an employee may have a better chance of working when both parties are emotionally mature, honest, capable of managing their feelings and emotions when things get tough, strong, healthy boundaries, and not using each other as a pawn for their own benefit. How awesome would it be if your business allowed its employees to drink alcohol at the office? Or does your company allow this already? Is it a good idea to have alcohol in the workplace? A bad idea? It's not uncommon for some employees, after a long day, to meet up at the bar for a drink before going home. Company culture is a ways away from the 3-martini lunches back in the 1960s, but casual drinking at the office is making a comeback. Wouldn't it be great if your company saved employees a step by providing alcohol at work? Or would it? Let's look at a few of the pros and cons. In a 2012 survey, research suggests that individuals who were mildly intoxicated had the ability to solve creative problems faster. This may explain why alcohol is more prevalent in companies like advertising agencies, where creativity is an essential job function. In addition, moderate alcohol consumption may improve good cholesterol, lowering the risk of heart disease and other ailments. Some employees may work harder or meet established deadlines when told that an office party that includes alcohol may await them at the end of the day or whenever the deadline is met. In as little as 30 minutes, employees can learn more about each other within a non-work interaction. This may improve interpersonal relationships between employees. A drink with a colleague can be a signal that it's okay to take a break from work responsibilities and loosen up a bit. Conversations about non-work related topics allow employees to know and understand each other, possibly changing perceptions and opinions, thus improving the working relationship and creating social bonds. As part of an employee incentive, employers may elect to use this as one of the employee benefits. Companies that maintain alcohol on site for its employees may attract and keep progressive-minded employees. Employers employers must be mindful of employees who abstain from alcohol for whatever reason, religion, health reasons, or simply not wanting to consume alcohol. These employees could feel pressure to drink alcohol to fit in, or they'll feel isolated from colleagues once the drinking begins. This may lead to the non-drinking employees feeling resentment or possibly looking for employment elsewhere. Alcohol is easily accessible to those who may have drinking problems. If your employee is a recovering alcoholic, for example, how do you think it would feel working around free alcohol? The temptation would be great to relapse and have another drink. Being surrounded by free alcohol can make it terribly difficult for an employee who is a recovering alcoholic fight an addiction and concentrate on job duties. Alcohol may bring underlying feelings and emotions to the surface. For example, this could lead to an employee experiencing aggression from another employee, which could result in a physical altercation or sexual harassment claim. Companies may also risk litigation if, for example, an employee sustains an injury while at work or driving around town on behalf of the company. Employees who drink excessively may not show up for work the next day or may experience a regular occurrence of absenteeism due to hangovers, fatigue, or inability to function at the office. Accidents may occur from employees who show up for work thinking they are fine when in fact they could be impaired by excessive alcohol from the previous day. The million-dollar question: is it a good idea to have alcohol in your workplace? Certain industries like transportation and healthcare? No way. If drinking at your office puts a customer or an employee in danger? No way. There are a number of factors you as a business owner should consider when thinking about introducing alcohol to your employees. The type of business, what time drinking will be allowed, what are the employment policies as it relates to drinking, has there been a review of the company's insurance policies, and other factors. If alcohol is approved for consumption in your workplace, I hope it's because someone did their homework with regard to protecting your company's assets. That includes the most important asset, your employees. Is it a good idea to hire a third-party HR, a PEO, or a professional employer organization? This question was submitted to me by Gundog4314. So Gundog, here's my answer to your question. I'm not going to go into what is a PEO. This video is to discuss the pros and cons of hiring a PEO. Let's get into the pros of hiring a PEO. A PEO is an already set up, established HR department that your company, once you sign the contract and pay your fee, that's one thing you don't have to get bogged down with. You don't have to learn and understand a lot of the laws and guidelines associated with hiring an employee in your state. And that can save you some time. And you can spend your time running your business and going out and doing the things that you should be doing as a business owner. The PEO will take care of all of your payroll needs. All you need to do is click a button and your employees will receive their checks in whatever manner that employee selected, paper check or online deposit. And again, that depends on what benefits the PEO has with regard to how the employee would receive their paycheck. Employment benefits. With some of these PEOs, you can get Fortune 500 type PEO benefits. Besides health insurance, life insurance, accident insurance, you can get things like adoption help. You can get job counseling. You can get substance abuse counseling, 401ks, all kinds of benefits. But getting those benefits depends on the type of PEO you would select. You could get some really great benefits and offer those to your employees. And that could be an incentive for an applicant to say, hey, I think I want to work at your company because you've got all these great benefits. The PEO takes care of your taxes. They take care of your employer taxes, your FICAs, your FUTAs, your SSI taxes. Not only does the PEO pay those taxes, they also file the tax returns. So that's one less thing you would have to do as a business owner. And don't forget W-2 forms. The PEO will send out W-2s to all of your employees. And if you're on the payroll as a salaried business owner, you would get your W-2 form as well. Having a PEO partner in your business can help you reduce employment liability. Let's get into the cons, and some of this I am going to be speaking from my own personal experience. One of the first tasks I was given as a business operations manager at one of my first positions was to break up with the PEO organization that they had been using for, I guess, 5 or 6 years. And let me tell you something, con number one is getting out of those contracts can be challenging. With my experience, there was a certain window, a certain 60-day period that I had to get out of that contract. And during those 60 days, if I missed it, I was obliged to be in that contract again for another year. Will you be able to get copies of your employee files? Will you be able to make copies of those documents? What about the employee handbook? Will you be able to take that employee handbook with you? When I left the PEO that I was supposed to break up with, I was not able to get any of that information. I had to create a new handbook myself. So that means once that you break up with a PEO, for whatever reason, you're going to have to set up your own HR department. So the things you're trying to get out of doing now, you're going to have to eventually do it if you ever break up with that PEO organization. You're going to have to find an insurance agent, and you're going to have to understand a little bit about insurance. You're going to have to make sure that the insurance company can offer the same or similar types of insurances that you have currently with the PEO. You don't have a lot of control with the PEOs, and in some contracts, depending on how it's written, the PEO has the authority to hire and or terminate an employee. So if you think you have a really great applicant and you want to hire them as an employee, that PEO may overrule you and say, for whatever reasons, we do not want you to hire that person. And that goes the same with terminations. If you have an employee that you would like to terminate and you go to the PEO and you say, hey, this person is going to be terminated effective blah, blah, blah. The PEO may say, whoa, 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 whoa. We don't think that that person should be terminated, and this is why, so don't terminate. And they can do that depending on what the contract states. There are also security issues with regard to all the employment files with the PEO, especially if someone breaks into their system and gets all of the personal information like social security numbers and things like that. You don't have control over that, the PEO does. You also experience a lack of control with the employees and lack of control with regard to essential processes. And the fact that you don't have an internal HR department, that will put some drag time between you and any decisions that you might want to make. You can't make snap decisions when you've got a PEO when it comes to HR and things related to HR, you must consult with that PEO prior to making any decisions. Let's talk about the cost for PEOs. Typically, a PEO, the cost for the PEO ranges from 3% to 15% of your gross salaries, and that's every paycheck. So you do the math and determine if that's something that your company can afford. And there may be some upfront costs. I was reading where one company decided to get involved with a PEO. Once they signed the paperwork and they were ready to go, 48 hours before they were ready to go, the PEO said, "I'm sorry, you need to pay us 2 weeks in advance of salaries." Well, the company didn't have that. And then they were also told that they had to pay some additional upfront fees, which the company also did not have and had to make arrangements. Back when I first started as a business ops man back in 2004, there was no such thing as co-employment, or at least it wasn't talked about from the legal standpoint. Now, if you get involved with a PEO, you both become co-employers. We had an employee that filed a lawsuit, what she thought was against us, but it was actually against the PEO because she said she had a workers' comp claim. That doesn't happen anymore. Now, both parties, co-employers, you both coexist. If there's a claim against one, there's a claim against the other. So you're not getting around any type of legal issues if you hire the PEO. You're both in it together and you both settle it together. And finally, what happens if that PEO does not keep their end of the bargain? What happens if they do not pay your taxes? What happens if they do not file your taxes? What happens if they don't pay your employees, or they pay your employees sporadically? That's something you will have to consider. With the IRS, there's something called a voluntary certification program. This will at least remove the responsibility of you filing your taxes and transferring that ultimate responsibility to that PEO, but only if the PEO has the certification. So if you are looking for a PEO, make sure that they have the IRS voluntary certification. Otherwise, if your PEO doesn't do any of the work that they're supposed to, you as the business owner are ultimately responsible for that. This is not an all-inclusive list of the pros and cons against a PEO. Is it a good idea to hire a PEO? It's up to your individual company and its unique situation. Use the information in this video as a guide to help you decide whether a PEO is right for your company. Are you considering getting a business credit card for your employees? If so, you need to watch this video. My name is Nina, and I'm about to get in your business. Want to learn more about business operations? You know the drill. Click that subscribe button and smash that notification bell so you'll be alerted when new videos are uploaded. Business credit cards. We all get solicitations in the mail, and some of you probably thought about getting a business credit card for your employees, especially those employees who regularly submit large amounts on an expense report. But is it a good idea to trust an employee with a company credit card? Let's pick it apart. Expense reports are a lot easier since there are no reimbursement checks or conflicting amounts spent on behalf of the company. In addition, using a company credit card ensures that all expenses are submitted to the bookkeeper in a timely manner. This gives the bookkeeper the ability to analyze all expenses for each job. Business cards are typically tied into some kind of reward program for airline miles, points, or cash back. The more users on the company card means the more credit card rewards earned. And not only that, your company gets to keep all the points earned when employees make company purchases. Businesses need a credit score just like people. It's difficult to get things like business loans or lines of credit without a business credit score. Business credit cards can help start your company's credit history. Employees, especially new and/or younger employees, no longer have to use personal money for business trips, client dinners, hotel stays, office supplies, and other company expenses. It also saves time and hassle if your company elects to buy lunch for the company when an employee can go pick it up without worrying about how they're going to pay for it. Good intending employees may make spending decisions on their own without following established business processes. Here's an example. What if an employee has been approved to purchase a printer for $300, goes to the store, and finds out there are no more printers at that price? That employee may decide on their own to get a printer costing a lot more. There's always a chance an employee can use a business credit card for personal purposes, thinking no one will find out. I personally had an employee many years ago who booked his vacation hotel room with a company credit card. Inability to pay a credit card bill due to overspending and fraud may result in a lowered credit score and damage to the company's credit. Poor credit can limit your company's ability to grow and obtain new credit. No matter who is an authorized spender on your business credit card, your company is responsible for payment for all purchases. If your company avoids the risks associated with issuing business credit cards to employees, they can be a useful tool to help your business grow and prosper, as well as streamline many of your company expenses. If your company elects to issue business credit cards to its employees, please watch my next video, Issuing Credit Cards to Employees. Is it a good idea to hire a friend or family member? This is a requested video by one of our subscribers, and at any time if you would like to see a topic discussed on this channel, please feel free to send me a message in the comment section below. Hiring a friend or family member, that's not a simple yes or no question for many reasons. And please know that this video is not at all meant to tell you yes or no. There are pros, cons, and recommendations, and I will talk with you about all three. On a personal note, I've been hired and I've successfully completed a number of tasks on behalf of companies owned by my friends. In all relationships, there are checks and balances, and a professional relationship is not an exception. Let's talk about the pros. You may not need to do a background check, especially if it's someone you've known for a long time. You can review the resume and know immediately if that person is lying about a particular skill set. You may both know the same people, so their references might be people you know and you can contact easily. Maybe your friend will work harder for you since you own the company and he or she knows you personally. If you hire a family, there could be some tax breaks. Check with your accountant for more information. If you're in a crunch, that friend might be willing to work late hours for you, especially on short notice. You already know what to expect with regard to their attitude and a few other things. Now, let's talk about the cons. All right, and let's get real here. Here's some real scenarios. Talking about money could get really awkward, especially if your friend or family member knows information like your personal net worth or the annual profits of your company. Friends could undermine your leadership with other employees by not taking your authority seriously. Terminating a friend or family member is difficult for most businesses, and this could create negative feelings within the company, especially if the friend or family member produces inferior work. Remembering when to be a friend and when to be a boss could be tricky at times for both of you. What would happen if you denied the friend or family member a raise, gave them a negative performance review? What if you disagreed with them publicly? What would happen if you gave an awesome assignment to someone else instead of them? Family and friends can bring family and friend drama in the workplace and potentially spread information you may want to keep private. If the professional relationship doesn't work out, for example, if your business fails, will that relationship survive? Accusations of nepotism can bring down company morale. Either you or your friend or family member can take advantage of each other. For example, you may possibly put more duties on the friend because you know they will do the work, or your friend may assume special privileges and become lax at work or show up late on a regular basis. Here are my recommendations. If you choose to hire a friend or family member, please remember these considerations. Are there any long-term effects related to hiring a friend or family member? For example, if the experience ends negatively, will this indirectly affect other relationships? Do you think there will be an anticipated expectation to pay a family member or friend more than what you would pay another employee? Does the family member have a strong work ethic? How would that person react if you overrode a decision they made? Has the friend or family member been terminated from prior jobs, always bragged in the past about stealing items from past jobs, disclosing confidential information from prior jobs, poor attendance from prior jobs? This could be an indicator of the possibility of similar issues at your company should you hire him or her. How would the friend or family member take professional criticism or uncomfortable situations like being denied time off? What if the friend or family member took a sick day off, but you found out that they were not sick but went to a baseball game? Are you comfortable assuming an authoritative position with this person? Will they be okay in a subordinate role in your company? Whatever position you have open, consider what skill set is required to succeed in that position. Do not hire a friend or family member just to help them out. A snap decision can be damaging for your company. Don't skip any new hiring processes. That includes skipping interviews and signing important documents related to new hires. If possible, keep a buffer between you and the employee by not becoming involved in the day-to-day management of that friend or family member. Maintain the same relationship as you would an employee who is not related to you. Define the relationship clearly. Make sure the individual understands that there is no preferential treatment, and bring up the different scenarios that could happen. Review the employee handbook and all the guidelines. Don't sugarcoat anything. Explain how your company tracks performance. Then measure and track performance just as you would any other employee. Base your results on performance. If they deserve a raise, they get a raise. If the results are not satisfactory, counsel and document. If there is no improvement, terminate, no matter who it is. No matter what your final decision is, hiring a friend or family member can be a blessing and a curse, depending on how the situation turns out. If you are a strong manager and are able to treat employees equally, understanding that there is a possibility to damage or perhaps lose that personal relationship, then go for it. If you think for just 1 minute there could be an issue with hiring that friend or family member, then I recommend that you consider not hiring that individual. What is your experience hiring and working with a friend or family member? Have you ever had to terminate a friend or family member? I had to once. Is the personal or professional relationship solid? Rocky? Please let me know in the comments section. At the end of the day, it gets down to just these two things. 1. If you did not know that friend or relative, would you have hired him or her? 2nd, is hiring this person beneficial to your business? If you want to know more about business operations, business management, human resources, and other topics related to running a business, click on one of those play links. Click on one of these click on the playlist.
One eternity later.
Click on one of these playlists. Thanks for watching. And don't forget to subscribe.